They're the heavy artillery plays. They're the three items that make up the vast majority of your powerful turns in the market. There are a small handful of very powerful events, I call them plays, events. And one of those events is the elephant bar. Okay? This is event number one. It's the elephant bar. Now, you can have a bullish version or a bearish version, but let's draw in the elephant bar. That can be red for bearish, it can be green for bullish, but this is event number one. Event number two can be something like, I'm not going to go over all of these, but this can be a topping tail bar or a bottoming tail bar, right? It's event number two. Okay. This can also be the reverse. All right. It can be this. Okay, that's two. And then let's just do three here. And you can have something like the bear 180 or the bull 180, right? Everything else is sort of like a regular to minor artillery item. This is your heavy artillery, and then you have your normal artillery. These three things are the heavy. All right, so I just want to just briefly touch upon these, but I want to give you statistics associated with this. Elephant bars will represent 60+% of all of your plays. 60+%. It's actually closer to 65, but let's just use 60 right now. 60+% of all of your plays. These will represent 15% of all of your plays. And these will represent 5% of all of your plays. They happen less frequently. Now, look at your heavy artillery and look at where the vast majority of your activity is always going to be when dealing with a power play, when dealing with the heavy artillery plays. It's going to be with your elephant bars. All right? Now, so guys, when I told you, if you're not going to take this long, all right, if you're not going to take that long, then you must wait. If you're going to take anything, you must wait for the number one play, the number one deliver of profits in a bear market, which is a bear elephant bar. And you get that right here. Boom. Anticipatory entry, 2 lots, stop above the high, first color change, mandatory add, and the rest is history. Okay? When someone tells me, like earlier, one of our traders said, it's not been easy over the last few days, this is the problem. You're not focused on the right thing to play in this market environment, and you must not be willing to bypass what has the lower odds, as good as it is. All right. Now, again, nothing's wrong with taking that long, but I told you I would rather miss this and catch that. This is usually going to be better than this, not every single day, but most days, because we're in a bear market. And the number one igniter of big moves in a bear market is an elephant bar, a bear elephant bar. If you made your focus bear elephant bars, you wouldn't be having a hard time in this market. All right, let's take a look at something else. All right, we'll take a look at something else. Let's take a look at MU today. MU starts off bullish activity this morning, but in the trap zone, but clearing nonetheless. I've explained to my traders that if you're in a trap zone, as long as it's wide, and especially if it's a clearing event in a wide trap zone, you can take this. I had some traders that actually took this morning. But as I told you, I would rather miss this and wait for, boom, the number one deliverer of flow, of trend, of power, of money in a bear market, the bear elephant bar. All right. This makes this bear elephant bar is extra powerful because it's originating far above its next key moving average below. So there's space, and it's surging from a 200 period moving average above. So any surge from a 200 period moving average, and any time a play has space to the next moving average, it's extra powerful. But this continues to drop all the way back to the low. Very, very powerful. The bear elephant bar in a bear market is the number one play of your life as long as we're in a bear market. It's the number one deliverer of profitability. It's the number one deliverer of results. It's the number one deliverer of consistency. All right. What first part did you miss? The fact that there's a big space between the origin of your play and the 220 period moving average? Is that the part you missed? Space concept. We talk about it all the time. All right. Okay. Now, anticipatory entry. Boom. 2 lots. Stop. First color change. Boom. 1, 2, 3. Done. All right. The first step, decide on the market type. What? We don't have to decide on a market type. You're in a bear market. Let's not even talk about another type. You're in a bear market. I don't want you to think that there is another one that's coming anytime soon. You're in a bear market. Your number one play is to focus on a bear elephant bar. Let's keep it simple, stupid. Let's keep it simple, stupid. All right. Cam Cure is saying, well, it's in a trap zone. Yeah, but what trap zones are appropriate to play when they are in what state? Let's help him out a little bit. What trap zones are okay to play in what state? A wide state. All right. So here's your trap zone. And when you have a wide state, playing on either side of the wide state is preferable. So here, the long is on the lower side of a wide state. The bear elephant is on the higher side of a wide state. All right, good. Okay. So, very clear. Guys, this is not rocket science. It appears difficult to you because you're bringing the difficulty. The market doesn't have difficulty. You bring difficulty, right? If things are confusing, you're bringing confusion. The market's very simple. It's got 3 movements, up, down, sideways. That's not complex. You bring the complexity. You're making this harder than it has to be. There's two color bars, red and green. There's 2 states, wide and narrow. There's 2 main moving averages, 220. You understand? There's 2 positions, above the Fab 4, below the Fab 4. There's two major trends up and down. There's two plays, long and short. There's two results, win loss. This is a very basic ABC game, but you're overcomplicating it and you're fighting the obvious. This is where all of the complexity and all of the problems come from. You're fighting the obvious. You guys still want to fight me here when I keep saying we're in a bear market and you should just be focused on red 99% of the time. But you want to come to me with the buts and the exceptions and the doubts, and you're still fighting the obvious. It's very obvious to me that you're fighting the obvious. You can't bring yourself to the easy part, which is focus on fat red and dive into the fat red. It's as simple as that. It really is. All right? Someone's saying Tesla. I'm not sure I see what you're saying about. Oh, on the 5-minute chart. Yes. Yes, you're playing the 5-minute chart. Boom. There is your fat elephant bar. And the combo play is the bear 180. Beautiful. All right. All right, but let's keep going here. Let's keep going. I'm going to show you. Well, let's take a look at Uber. All right. Now, Uber had a beautiful bottoming tail bar play off of a narrow state. Beautiful position here. And had a nice little run. Again, I can't fault you for taking that play. I cannot fault you. There's nothing technically wrong with that. But the thing that I don't want you to forget is that you are statistically going to have better odds waiting for the number one thing in this market, which is the fat bear elephant bar, which you should be trying to dive into before the bar finishes trading, the anticipatory entry. Entry, stop, first color change. Here's 2 lots. Here's 1 lot. And the rest is history. All right, but this was a very beautiful move off of that perfect narrow state position, bottoming tail bar. Nothing wrong with that either. But your best odds are going to be on the short side, waiting for the bear elephant bar. Intel. All right, here's the bull elephant bar off the open. Nice run, but boom, your bear elephant bar forms a bear 180. You want to jump into that bar, stop above the event. Your next color change, remember that combination? First entry, boom, stop. Next entry is the first color change, boom, 1, and the rest is history. All right. How is this difficult? Waiting for fat red. How a 12-year-old can easily do this. How is this difficult? It's not. It's only difficult when you're forcing the wrong thing. Cisco, look at this. Here's all the others were after the bull, right? So all the others I showed you, there was an initial bull run. And if you just wanted to simply wait for a bear 180, if and when it developed, you take the bear 180 reversal. But what if you get the bear 180 off? What if you get the bear elephant bar off the open in the right position? Nothing wrong with that. Boom. Stop. First color change. Here's 2 lots. Here's first color change, 1 lot, and the rest is history. So whether the bear elephant bar is under the Fab 4 or under the moving averages or above it, as long as there's space to the very next level of support, if it's above it, they're both takeable. They're both takeable. All right. So your MU is takeable up here. You've got room to the next level of support. You know, your Intel is takeable up there. That's fine. When playing the bear elephant bar, you're going to have the overall flavor of the market in your favor. You're going to have the winds behind your sail. You're going to have the fear element helping you, even if what occurred before it was green. All right. And Baidu, which thanks to one of my traders, brought my attention to this big gap up here. Here you were way above where's your fat bar? Right there and right there. Because remember, this was trading at the low, like that. 2 lots, stop, mandatory add on the first color change 1. This is optional as number 2, add. And the rest is history. What is truly difficult about playing a fat red bar, either high or under? What's difficult about that? Tell me, what's difficult about waiting for a fat red bar to develop in any of your stocks and then determining, do you have a decent position? Boom, go. What's difficult about that? The difficult part is waiting. All right, well, then you have to find a different profession, because the majority of your money is always in the waiting. Your money is in the waiting. This is an age-old axiom of market play. It used to be called your money is made in the sitting. All right, in the sitting on your hands, basically. It's always made in the waiting. You have to wait for your events to happen. You have to wait for opportunities to present themselves. You have to wait for the best odds. You have to wait to be successful in this activity. And if that's the hard part, you're going to really, really, really struggle. Now, what makes this easy, not easier, what makes this easier than most things is this fact. Let's do it again. Elephant bar, tail bar, 180. These are your big plays. 60+%, 15%, 10%. Now, it would be a little tougher if it was 10%. But the thing that delivers the results for you more than anything else also happens more frequently than anything else. You've got the best of both worlds. You got the best of both worlds. What happens the most is what rewards you the most, because oftentimes in life, guys, what happens the most is not the best. That's what happens most of the time in life. That what is good happens the less frequently. That what happens most frequently is not good. Well, in this rare scenario, what happens the most frequently is the best for you. That is special because that does not come along very often.